Welcome back to the deep dive from the One More Bitcoin channel. If you've been watching that massive collision, that tectonic shift where Wall Street is crashing right into Web3, then you are absolutely in the right place. Today, we're doing a really detailed examination of the tokenization of real-world assets, RWA. And our guide for this whole journey is a fantastic analysis we found on the One More Money blog. We're going to be focusing on one company in particular, ONDO Finance.
And ONDO they have positioned themselves so aggressively. They want to be the regulated bridge between these two worlds.
It's more than just a bridge, isn't it? Their mission seems way bigger than that.
Oh, absolutely. The mission, their core mission, is to, and this is their phrase, bring institutional-grade financial products on-chain. But the end goal, the real goal, is to become a fully licensed on-chain investment bank, a securities platform.
An on-chain investment bank, that's a staggering ambition, especially when you think about the size of the prize here. The One More Money blog puts the RWA market at a potential, $16 trillion?
Roughly, yeah. 16 trillion. It's a massive number.
So I guess that brings us to the central question, the $16 trillion question for today. Is ONDO's whole compliance-first, institution-focused playbook, is that going to be the thing that sets the standard for this entire industry?
Exactly. That's what we need to figure out. So we're going to break down their products, the whole ecosystem. Then we'll get into the regulatory fortress they've built.
Okay, and then how they make money from it. And of course, we have to look at the risks, right?
Right.
Especially with their token.
For sure. We need to apply some heavy skepticism there. So yeah, let's just jump in and unpack this.
All right, let's start at the foundation. When we say RWA tokenization, what are we really talking about here? Is it just a tech upgrade for old assets?
In a way, yeah. That's a good way to put it. The basic idea is you take these very reliable, highly regulated financial assets. Think U.S. Treasury bonds, blue chip stocks.
The kind of stuff global finance already runs on.
Exactly. And you merge them with the efficiency and the transparency of blockchain technology. You get 24/7 access, global reach. You're basically building better, faster rails for assets the world already trusts implicitly.
Okay, so that's where ONDO started. They went straight for that institutional trust with their first products. Let's talk about OUSG, their tokenized U.S. Treasury fund. I mean, treasuries are super accessible already. What's the new value here?
Well, the value is in the backing and the access. So OUSG is backed by the iShares Short Treasury Bond ETF.
Which is managed by BlackRock.
Managed by BlackRock. So right away, you have this huge signal of quality and institutional grade trust. So for a big fund in, say, Singapore, why buy the token instead of the ETF itself?
Right.
The value is the 24/7 trading. It's the global access without the usual friction of, different time zones and market hours. And the settlement is almost instant. It's really aimed at those qualified institutional investors, giving them exposure to U.S. government debt on-chain with a really low management fee, something like 0.15%.
So you're saying they're not solving for the safety of the asset. Everyone already trusts treasuries.
Yeah.
They're solving the friction of moving that asset around the world.
Precisely. It's a logistics and plumbing problem they're solving.
Yeah.
And then for the non-U.S. and maybe more retail-focused market, they have USDY. That's their yield-bearing stablecoin.
And how does that one work?
So the One More Money blog breaks this down really well. It's an over-collateralized token, so it's backed by more than it's worth, about 103% collateral.
Okay.
And that collateral is a mix of short-term U.S. treasuries and bank deposits. This is a really big deal for users outside the U.S. who want a dollar-denominated savings account that actually earns a yield based on high-quality government debt, and it all lives on-chain.
And looking forward, their plans are even bigger. I saw they're planning to tokenize over 1,000 U.S. stocks and ETFs.
The ambition is huge. I mean, imagine 24/7 trading for, say, Apple stock, and your dividends just automatically show up in your wallet. No delay.
That's the dream.
It is. They're trying to streamline that whole investment life cycle, getting rid of all the little friction points that slow everything down. But, and this is important, they didn't just create the assets. They also built the infrastructure to use them.
And that's where Flux Finance comes into the picture.
That's Flux Finance. It's their lending layer. It's basically a decentralized protocol that lets you use your tokenized RWAs, like OUSG, as collateral.
So it makes the capital more efficient. You're not just holding it, you can borrow against it.
Exactly. It boosts capital efficiency within their whole ecosystem. It's governed by the ONDO DAO, and it has these special risk isolation features. It just shows they're thinking about the whole picture, not just issuing tokens, but creating regulated ways for that capital to be put to work.
Okay, this brings us to what I think is the most interesting part. They have these great products, but like you said, a lot of projects can tokenize a T-bill. The real moat, according to the One More Money blog, is the regulatory side. The cornerstone seems to be this acquisition of a company called Oasis Pro.
This is where it gets really interesting. You're right. This is the defining strategic move. The Oasis Pro deal. It wasn't just buying a team or some tech. It was about instantly acquiring the licenses, the actual regulatory permissions, to operate as a financial institution in the United States.
A financial institution, not just a crypto company.
Exactly. And this set of licenses, this trifecta, as some call it, it creates this deep, deep moat that separates them from, well, almost every other crypto-native project out there.
Okay, let's break that trifecta down, because these are not easy licenses to get. What was the first one?
The first, and maybe the biggest, is a broker-dealer license. This is huge. It means ONDO can legally originate, underwrite, and distribute securities on the blockchain.
So they're not just minting tokens, they're acting like an underwriter, like a traditional bank would.
Precisely. They are a regulated underwriter.
Yeah.
Without that license, they're in a gray area. With it, they're playing by the same rules as Wall Street. It gives investors a massive amount of confidence.
Okay, so that covers selling the assets legally. What about trading them after the fact?
That's the second license. An alternative trading system license, or ATS. This basically authorizes them to operate their own regulated secondary market. So think of it as their own compliant mini stock exchange for these tokenized securities. All the trading happens under strict regulatory oversight.
A regulated on-chain trading venue. Wow. Okay,
Yeah.
and the third one, it seems to tackle another big headache in traditional markets.
Yeah, record keeping and distribution. That's the transfer agent license. This is the one that lets ONDO act as the official record keeper for these securities.
So no more slow, expensive middlemen for dividend payouts.
Gone. Think about how clunky that process is now. It takes days, involves countless parties. The transfer agent license lets ONDO automate all of it. They can track ownership and send dividend payments directly and instantly to user wallets through smart contracts.
When you put all three of those together, broker-dealer, ATS, transfer agent, it really does seem like they're not a DeFi protocol anymore. They're a tech-forward financial institution that just happens to use blockchain as its settlement layer.
That's the perfect way to describe it. And they didn't wait to use this power. They immediately launched ONDO Global Markets.
Right, and that's aimed at non-US users.
Specifically, they're targeting high-growth regions like Asia and the Middle East, offering that 247 access to U.S. stocks and ETFs. They are directly attacking that ancient T+2 settlement friction that plagues cross-border trading. Their partnership with BX Digital on the BNB chain is a perfect example of this in action.
It's a completely different way of competing, isn't it? I mean, most of DeFi is obsessed with total value locked, TVL.
Right. How much money is in the protocol?
But ONDO seems to be competing on an entirely different axis. It's about the depth of your licenses, the strength of your regulatory compliance.
That's it. They're not building a business to compete with Uniswap. They're building a business to one day compete with Fidelity or Schwab or even Goldman Sachs. That compliance moat is their entire competitive advantage.
So let's follow the money. How does this super regulated institution-ready machine actually make a profit? The One More Money blog mentioned a sort of dual revenue model.
Yeah, it's split between short-term and long-term. In the short term, it's pretty straightforward. Transaction fees.
From trading on their platform.
From trading on ONDO Global Markets, or when people subscribe to their funds like OUSG. These are pretty small fees, somewhere between 0.1% and 0.4%. It's a volume game. Low margin, but if you scale it globally, it can become very significant.
And what's the long-term vision for revenue? Is it more stable than just transaction fees?
Oh, much more. The long-term plan is to transform into a full-blown asset manager for tokenized RWAs. This means predictable, recurring income.
From what? Management fees.
Asset management fees, performance fees, interest earned on collateral. But also, and this is clever, they can monetize the regulatory rails themselves. They can license their infrastructure or act as the transfer agent for, say, another big bank that wants to tokenize assets but doesn't have the licenses.
So they become the infrastructure provider for others.
They become the compliant pipes for the whole industry.
Okay, this all sounds incredibly solid. So let's pivot to the token. ONDO. This is where we need to bring in that heavy skepticism you mentioned, because you just described a company that looks like a bank, has BlackRock in its ecosystem, has federal licenses, and yet the ONDO token itself has no claim on any of that revenue. That feels like a massive disconnect.
It is a massive disconnect, and it is, without a doubt, the core risk for anyone looking at this from a crypto investment perspective. Right now, the ONDO token's only utility is governance. It lets you vote in the ONDO DAO.
So it's a governance token, period.
Period. The critical caveat that the One More Money blog points out is that the token has no direct intrinsic claim on the company's revenue or profits. Now, this is almost certainly a strategic legal decision to avoid having the token classified as an unregistered security.
But the consequence of that is that its price isn't tied to the business fundamentals, right? It's just tied to market hype and speculation.
Exactly. Its value tracks market sentiment. If we look at the numbers the blog gave for November 2025, you've got a circulating supply around 3.16 billion out of 10 billion total. That puts the market cap at about $2 billion. But because there's no revenue share, the price is just incredibly sensitive to future token unlocks. There's this huge overhang risk no matter how well the actual business is doing.
Which brings us back to that on-ramp problem. If ONDO is this compliant walled garden, how does a regular person, around the world actually get access to these products?
Well, that's the fundamental tension, isn't it? The tension between institutional compliance and the permissionless ethos of DeFi.
Right.
So you have two paths. Path one is the front door. You go through ONDO Global Markets. You do your KYC, your AML, you prove you're in an approved jurisdiction. You upload your passport, you wait to get cleared. It's higher friction, for sure, but in return, you get much higher trust and legal certainty.
And path two is the DeFi route.
Path two is the DeFi workaround. Once these tokens, like USDY, are live on a public blockchain, they can sometimes end up trading on a decentralized exchange like Uniswap. That's way lower friction, much broader access, but
You're in a regulatory gray area.
you're in a gray area and you're dealing with fragmented liquidity. So for you, the listener who might be used to the ease of DeFi, it's a clear choice you have to make. Do you want higher friction for more trust or lower friction for much higher risk? ONDO's whole strategy is betting that the big money, the institutional capital, will always choose the first path.
And that institutional focus is just baked into the team's DNA, isn't it? This isn't your typical hoodie-wearing crypto startup team.
Not even close. I mean, the pedigree is just top tier. The CEO and COO both came from Goldman Sachs' digital assets unit, the chief strategy officer, ex-McKinsey Digital Assets.
So they know how to talk to regulators. They speak the language of institutional risk committees.
They speak that language fluently. They know how to structure security, how to navigate SEC filings. That background is the real engine behind that regulatory moat we talked about. And then you look at their backers, Pantera, Founders Fund, even a Morgan Stanley blockchain fund. It all sends the same powerful signal.
Looking ahead then, what's next on the roadmap? How do they keep building on this foundation?
The roadmap is just as aggressive as you'd expect. The immediate goals are scaling up ONDO global markets globally and expanding USDY's reach across more blockchain networks. But the big fundamental project is a dedicated layer 1 chain.
They're building their own chain. The ONDO chain, why not just use an existing one?
Because they want to control the base layer. By building their own proof-of-stake chain, they can design it specifically for institutional RWA compliance.
What does that mean in practice?
It means they can hard-code compliance features directly into the chain's core infrastructure. Things like automated KYC checks, wallet whitelisting, jurisdictional rules. It all happens at the protocol level.
So compliance becomes transparent and automatic.
And globally enforceable, which is exactly what you need to attract the kind of multi-trillion-dollar institutional capital they're chasing.
Okay, so before we wrap up, let's just clearly summarize the major risks that the One More Money blog highlighted. What are the big things to watch out for?
Okay, 4 main things. 1, persistent regulatory uncertainty in the U.S. The rules for security tokens are still being written, and that's a risk. 2, liquidity risk. Some of the best products, like OUSG, are only for qualified investors, which limits the pool of participants.
Right.
3, competition. They're fighting a war on 2 fronts. You've got agile DeFi-native projects on one side, and then you have the giant TradFi firms like BlackRock who could decide to do this themselves.
And the fourth is the tokenomics we discussed.
The fourth, and maybe the biggest for crypto investors, is that structural tokenomics risk. The fact that the ONDO token is governance only, combined with the selling pressure from huge future unlocks, creates a real headwind for the token's value.
Okay, so to bring it all together for you, our listener, what's the final takeaway? ONDO Finance is, without a doubt, a key project to be watching.
Absolutely. They've managed to combine those hard-to-get regulated licenses with institutional-grade assets like U.S. Treasuries, and they have this truly global ambition to fix the plumbing of traditional finance. They're building a regulated, compliant future for RWAs, and that is just incredibly significant.
It really is.
Which leads me to a final thought, sort of a provocative question to leave you with. Given ONDO's very clear goal of becoming an on-chain Goldman Sachs, does the future of this $16 trillion tokenization market actually stay open and permissionless, the way DeFi first imagined it?
Or does the other side win out?
Or does regulation and the absolute need for institutional certainty mean that ONDO's license-heavy, compliance-first model becomes the only game in town? That tension between open access and regulated certainty is really the debate that's going to define the next decade of finance.
That's a powerful thought to end on, thank you. Now, just a quick note, this deep dive is for educational purposes only and does not constitute investment advice. Investors should conduct their own due diligence before making any financial decisions. We are not responsible for any investment losses incurred based on the information provided here. Thank you so much for joining us for this deep dive. If you found this breakdown of ONDO's strategy useful and you're interested in cryptocurrencies, RWA, DeFi, and Bitcoin investment, please hit that subscribe button on the One More Bitcoin channel. That way you won't miss our future videos as we keep tracking this convergence of Web3 and Wall Street.
And please, do like the video and leave a comment. We really want to know what you think about this whole topic.
Thank you for watching again, and see you in the next deep dive about blockchain, Bitcoin, and crypto.